All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. Um, hey, Nick, I want to read this really quick. I'm not going to read every comment that has come in just yet, but Nick said, hey, Blake, last week TV debates, the stay camp was weak and the leave camp was strong. This week we could see that reverse with Tuesday evening TV debate, and all the polls still have 20% undecided anyway. Um, okay, very good. And Nick, it's you know where my money's at. Well, actually, I take that back. I don't really have any money on it. Well, I mean, I, I won't. Um, go, going into the Brexit vote, but you know where my take is. Um, I'm going out of town, man. It's just the way the world works. I'm going out of town. I'm going out of town, and in order to get massive amounts of volatility, the only way that's going to happen is for the UK to leave the Eurozone. So, when I go out of town, crazy crap happens, and, the UK is going to leave. It's all because of my vacation is going to alter the future of the United Kingdom. And, you may choose not to believe that, but it's just the way it is. I'm just kidding. I'm just joking. Obviously. I'm just kidding. Uh, but anyway, and Nick said that's what the poll said as well. Yeah, that's what I'm telling you, man. Blake's leaving. UK's heading for the door. It's just it's the universe as we know it. I mean, it just is. I'm just joking. I'm just joking. But it is going to be crazy. Hold on, really quick. Okay. Let's see here. We're going to get started on our analysis. So let's start with the euro. And like I said, the euro dollar for me is a buy on dip type of situation. The euro dollar. Obviously that jobs report on Friday was holy crap. Talk about it was crappy. All right, let me get rid of all these blue lines that didn't transfer over correctly over the weekend. Let me okay. It was a really, really weak jobs report, any which way you slice it. And I think the market is looking. I think the Fed is thinking that we are, near full employment, so the numbers are going to start to weaken. And I figure we would start getting down towards like the 100,000 mark. But considering the fact that we created only 38,000 jobs or whatever the number was, and knowing gee, you can factor in all the other poll numbers, whatever, regardless, or factor in all the strike numbers or whatever. Regardless, the numbers were very, very shoddy, and that uh, uh, speaks to some of the structural employment issues that we have here in the U.S., and that is concerning. I think those numbers really left the dollar, in my opinion, um, it left the dollar in a what would be considered a range-bound environment. Now, you can, if you want, you can short the euro right now. Like I said, I'm not doing that. The only dollar longs I have right now are the dollar Canadian. That's it. Okay. I'm not short the euro. I'd be more excited about buying it on a dip, but I wouldn't mind shorting a rally either. But the area that I'm looking to short a rally, which by the way, I had an order out overnight and I already canceled it. I had an order to sell at 114.20. Now, if you don't know why, the 114.20 level is the 618 retracement here. Let's get rid of this since we already know that. It was a 618 retracement of the high, the spike high up here. Let me grab that. Trying to grab that fib. There we go. The spike high up at 116 to the low down at 111. The 618 is at 114.16. So I'm going to write down 114.15 just to round it out. Okay. We are back in a range environment. So we went from a bearish to a range environment because of Friday. Now, I would be interested in shorting the euro up here, but not where we're currently at. Okay, so let me say that again. I'd be interested in shorting the euro up here, but not where we're currently at. Now, I think that Janet Yellen is going to stay the course, if you will. She's not going to be swayed by the jobs report. You're not going to hear anything different that you would have heard if we had created 120,000 jobs. And maybe she might say that she might reference the weak jobs report, but if she does, she'll just say that she'll probably defend the fact that we had a weak jobs report and say that that was a one-off, or as we approach full employment, she had expected the jobs picture to look on the surface a little bit weaker. She's going to defend it, but the bottom line is I feel that she is going to leave the doors open for a rate hike in the coming month or two. Now, obviously, I don't believe that she's going to raise rates in this month, but remember, she just said last Friday, not last Friday, the Friday before last, at Harvard, that rates are going to rise. It makes sense. It'd be sensible for rates to rise in the coming months. Again, I think she, for the sake of saving face, she's not gonna change that tune too much. Now, should the euro, come down, I think this 112.50 is going to offer a place to be on the long side. All right. Personally, I'd love to be on the long side down there. All right, but I'm going to say it again. I'm not interested in buying the euro or selling the euro where we're currently at. I'd like to see a short up here or a long down here at 112.50, maybe 112.25 if we can get it, which would be 112.20. That'd be phenomenal. But I'm going to write down 112.50 as support. That'd be a 50% retracement. That'd be breakout point right here. So this to me, this would be the place to be on the long side of the euro. That's it. There's nothing for me to do here. Nothing. I mean, you may think of something to do here, but not me. Okay. All right. Let's go over to the cable. So here's the pound. The Brexit votes, or the Brexit, obviously the polls have had a hell of a time moving around the cable, and the cable, I'd drawn for you last week. I said, hey, you can buy it down here at 143, you can sell it at 146. There's not much to do up where we're at. On Friday, we got as high as 145.85, I think, if I'm not mistaken. 145.81 or 81. Okay, we came really close to that 146 level. On these polls, we dipped down below. We dipped down below that 144, just enough to probably frustrate a lot of people. But again, I'm going to reiterate, there's nothing to do here. Nothing. I mean, I did short the euro pound last night. I already got out. I did buy back the pound New Zealand. I'm sitting in a, decent profit. I'm up like, 65 pips or whatever. But nothing exciting because I actually lost the equivalent of that last night. So when I got stopped out. So again, the cable, why do anything here? You know, let's consider being on the long side if it gets down to 143. 143 would be channel support. Okay, I think it's a channel. I'm not 100% positive here. Let me remove this and let me remove this. But to me, it seems more logical to try to play these extremes versus you know trying to play it now where it is. Oh, here, let me put this down a little bit. That I'm just going to connect the very tips, copy paste, something like that. You know, and look, just short the cable up at some resistance, buy the cable at some support, and be done with it. All right. While it's sitting here, um, it's a disaster. And people are getting whipped around so aggressively in the pound, it's not even funny. It is not even funny. And I myself have played the pound New Zealand a couple of times, and hey, I'll be the first one to tell you, it's smacked me around a little bit. Just trading the pound New Zealand, not even the pound dollar, and I'm trading in really small position sizes too. So anyway, 143, 146. I know it's wide. I know the range is wide, but it's a crazy time to be trading the cable at the moment. Okay, so just trade the extreme ranges. Stay away from it where it's currently at. Now, the dollar Swiss. I did buy the dollar Swiss. I did buy the dollar Swiss on Friday. I bought it at like 98.05, I think, and I sold it on Friday afternoon at like 97.80 or something like that. I got out for like a very small loss, but I had been waiting for a dip down to 98 cents. It came following the jobs report. I picked it up and I quickly realized, oh, that wasn't too smart. So I got out of it on Friday. We are at a 38% retracement. It looks like we're going to have a little bit deeper retracement, which is fine. Look, let it come down. As far as I'm concerned with the dollar Swiss, let it come down. There's a lot of risk in the Eurozone right now. I would be lying to say that there's not a lot of risk in the Eurozone. There's a lot of risk in the Eurozone. We have a possible Brexit. You've got, a lot of referendums. You have the Swiss referendum over the weekend. You've got what was it, a Swiss referendum? Whatever it was. It was a Swiss referendum. You've got Spain, Greece. You got funding issues in Greece, elections in certain parts of Europe. There's a lot of risk in the Eurozone, and because of that, the Swiss franc may come. The Swiss franc may come in demand a little bit. Let it. As far as I'm concerned, let the Swiss come into demand and let the dollar Swiss drop again. I want to find a place to buy it. I just don't know where that is just yet. Obviously, if we get another dip down towards 95 cents, that's going to be what I'm looking for if we can get there, but who knows if we're going to be able to get there or not. All right. What I am looking for right now is at least a dip down to like this 96.40. That is a 618. I don't think we're going to get there today. We're starting to get pretty oversold on some of these, hourly charts. So for today, 97. It's a round number. It's a 50% retracement. It's probably going to offer some support today. I don't know if that's a place that you necessarily want to be on the long side, but it should offer some support down here. The flip side is if you think there is a lot of risk in the Eurozone and you're like, man, the Swiss franc, I'd rather own Swiss francs than not because of all the things that are happening in the EU, then why don't you try taking a shot up here? So 98.50, 97 cents. I think that's the way you have to trade it. I think if you can get it back up to 98.50, That'd be a great place to be on the short side of the dollar Swiss. Matter of fact, I think support down here is going to be key. The euro. Okay. The pound, there's no key support or resistance. It's just a mess. Big hot mess. Okay. Let's go over to the dollar yen. So the dollar yen, what do you do with this bad boy? You know, this is one of those things that I was thinking, you know, hey, oops, I was thinking, hey, you know, maybe I'll buy some dollar yen because the dollar yen's starting to show some divergence from, you know, from the market. I was thinking if the stock market came under pressure, you know, the dollar yen may, or the yen may strengthen, and it did. And matter of fact, we haven't seen hardly any equity market weakness, yet the yen has been extremely strong. Now, you could argue and say, well, that's mostly yen dollar, or that's mostly dollar related, but it's not. I mean, look at the euro yen. The euro yen looks like crap on a stick too. So, you know, not only, you know, not only is it the dollar yen, but it's the euro yen. You got the pound yen, doesn't look healthy. You know, obviously, you know, the pound yen's looking pretty gnarly. Some of these, you know, like here's the New Zealand yen. I mean, this thing's barely holding on to support. So, you know, I think the yen actually looks pretty damn strong. So with that being said, I think it's possible that the dollar yen breaks through 105.50. You know, I had my doubts a couple of weeks ago, but now, man, if this stock market comes under pressure, we might slump right through here. And I'll tell you, I don't want to be long. I don't. Not right now. You know, once all the smoke is cleared, maybe, but and all the dust, but not right now. So now, where's the place to be on the short side? I think if we can get above 108, so let's just say 108, roughly 108.20. I mean, that's the place you want to be on the short side, right? 108.20. Oops. And by the way, I think I have to put this back into a bearish trend. I do. I mean, you know, I was thinking we might have shaken off that range environment, or shaken off this bearish trend, but man, this thing looks, you know what, I'm going to put it back in a range, but it's close to turning bearish again. You know, obviously if we break below 105.50, and just so you know, if we break through 105.50, we should see 100 pretty quickly. I'd say within weeks, with maybe even days to a week or two. You know, if we broke through 105.50, I mean, there's got to be a lot of people getting on the long side, thinking, okay, as long as we stay above 105.50, we drop through this 105.50, we're probably going to close in on 100. And listen, once we get down to 100, or if, I should say, if we get down towards 100, I personally am looking at buying the dollar yen. Obviously, I'm going to have to wait for some pretty good risk aversion to come in, but that's what I'm thinking. Okay, we get down towards 100 yen, we start getting down towards like the mid 90s. I will be on the long side. I'm not doing anything with the yen at the moment. Just not doing it. All right, support. We'll have to write down the spike low, which is 106.35. I know we went to 36 overnight, but 106.35. Okay, that's support for now. All right, let's take a look at the Canadian. I am long the dollar Canadian. Matter of fact, I bought some Aussie Canadian and Euro Canadian last night. Very small positions, but I believe that that crude oil is going to stay below 50. Now I may be wrong, but that's, you know, my take, and that's why I'm staying long the dollar Canadian. My cost average is at 130.14 this morning. Okay, so I'm out of the money, about 80 pips. give or take, and I'm sitting in it. Now, we do have key support here at 129.15. That is a 38% retracement. It's also horizontal support. You know, we might actually give it down to this low here, which is 130, 128.93. Basically, we can give it down to 129, but I'm going to write down 129.15 for now. That's pretty key support currently. Resistance, you know, if you're a non-believer and you think that crude oil is going to continue up towards 60, then you'd probably want to be on the short side of the dollar Canadian. But I don't know if you necessarily want to be short here. Let's see if we're flagging. Looks like we might be flagging. Hard to say. This flag is almost outlasted. It's, you know, basically it needs to break down now to be a valid flag. But I would say resistance right now, 129.80, maybe all the way up to 130. And 130 is obviously a big number just in general. Let's get rid of this for now. Yeah, 130 is just going to be a big number all the way around, you know. So yeah, I'm going to write down 130 just because it's a big round number. Oops. And we are in a range here, bouncing around. Let's see, do we have time for the Kiwi? Let's do the Kiwi really quick. Okay, so the Kiwi, I was short. I was short right here at like 69.20 on Friday. I had my stops above 70 cents, and you can see why. Okay. I had this basically I knew that above 70 cents, big round number. This is also a 78% retracement of this. I figured, well, if it gets above, you know, this 69.75, 70 cents, it's going to be pretty bullish. So what I did is I shorted it on Friday at 69.22 or something, and I got out at like 69.22. I basically flatted it. I'm out of the Kiwi dollar short. Now keep in mind the RBNZ is tomorrow night? Wednesday, excuse me. So RBNZ is on Wednesday, and the expectations have shifted quite a bit for the RBNZ to not cut rates. Okay, so obviously the risk is that the RBNZ, you know, follows through with a rate cut. I think that would be the risk, but one of the reasons why this market is so strong is because rate expectations have shifted quite dramatically. This is an AB equals CD move too. You guys might remember this from Friday, but you know, we had AB equals CD, 78% trend line resistance. Anyway, I already got out of it, but support. So if we fall, now I have to say the Kiwi's been resilient as all get out. I would say that 69 cents is offering pretty good support here. Okay, and then obviously resistance is going to be 70 cents. And we are in a range for now. All right, I'll be back in a few moments. We'll do the Aussie dollar index, you know, peso. I'm out of the peso, by the way. I bought the peso on Friday. I sold it. Um, we'll talk about the Swedish krona and Norwegian krona, which I'm not in any Nordic currencies right now. But anyway, I'll be back in a few minutes. Thanks everybody for being here. Happy Monday. All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. Hey, if you guys missed it, it was 118 degrees here in Phoenix over the weekend. 118 degrees. That's 40, was about 47, 48 degrees Celsius. Freaking hot. Oh my God, it's so hot. Um, it was, it's crazy. And honestly, I sat in the pool a lot this weekend. Just, I sat there and I had a big old straw hat on and I just sat my ass in the pool. It was so freaking hot outside. It's going to be only 112 today, and fortunately it's moderating back down towards like 105, over the course of the next couple of days. But man, it has been nasty, nasty. Mm. It was, we set record heat for these last 2 days. So it was record heat. Chad said, but it's a dry heat, right? Ha. It's, a dry heat, you may laugh about that. You might say, well, it's a dry heat, Blake, so it doesn't really matter. It's a big difference. I mean, when it's hot like this and you're in the shade, I mean, it's hot, but it's like you feel kind of like you're in an oven. But it's interesting. It's dry, so you're not like sweating. I personally, I'd rather be in. I've lived on Guam for a year and a half. I lived in Japan for 6 months. I know exactly what humidity is as a result, and I'll tell you, any day of the week, I'd take a dry heat over humidity. Any day of the week, because like when I lived in Guam for a year and a half, I don't think there was other than, I mean, there wasn't a time that I was outside that I wasn't sweating, even though maybe the highs were only around 90 to 92 degrees. I don't think there was a time that I ever went outside that I wasn't sweating. So, so yeah, Kay said ovens have a dry heat too, right? But I'd rather be in a dry heat. I'll tell you that much. Anyway, okay, enough about the weather. So here's the Aussie. The Aussie still looks like it's in recovery mode, and I am long the Aussie New Zealand, so I'm happy that the Aussie is actually starting to perk up a little bit. This is resistance, and I'll just go ahead and mark that up. That's pretty easy. It's right there, right where we're at. And matter of fact, what we need to do is we need to figure out why we're stopping where we're stopping. So there's no reason there. May got 161% extension stopping us up right here. Frankly, a move above 73.60 should take us to 74 cents. I'm going to write down, since we're right here, I'm going to actually write down 74 cents as being key for us today. Okay. So even if we hit new highs, don't get, oh man, look at crude oil. Crude just ripped. What the hell's happening there? You guys watching this? Crude oil just ripped higher. Okay, I'm getting to it. Any day. There it is. Okay, look at crude. Boop. What is that all about? That's a squeeze monster right there. That's all it's doing, just squeezing. No reason, just squeezing because that seems like the right thing to do at the moment. Let's take a look at Paul's trusted RBOB. Well, we're seeing a bounce in RBOB. Yeah, Pedro says in it's only crude oil. Gasoline's not moving. Yeah, I mean, gasoline's spiked up a little bit, but to me it seems like just a little bit of a squeeze play going on. Okay, anyway, what were we doing? We're doing the Aussie. So let's go back over to the Aussie. 74 cents. It's resistance, right? Okay. We're in a bearish trend, believe it or not. Let's go back over to the Aussie. So here's the Aussie. We're in a bearish trend, and we have to really take out this, in my opinion, we have to take out this 74 cents to turn bullish. You know what? I'm actually going to put it in a range because I think it's more dollar related right now, but just keep in mind that the Aussie is underperforming here. It really is. Man, what a spike up in crude. Whew, man. Okay. Anyway, support will be that low, which actually we can take it down a little bit to 73 cents, right? Right through here. So if you're like, well, I think the Aussie is a piece of junk, I want to short it, well, wait till 74 cents. And if you want to be a buyer, which makes more sense, would be down here, 73 cents, okay? All right. All right, let's go over to the dollar index. Here's the dollar index. So let's go back to late last week. Delete that. Delete that. Okay, so right now, let's take that off. Right now, the dollar index, we're holding the 50% retracement. I think further dip down towards 93.50. That's going to be where good support is. Now, if you ask me, it looks like we are flagging. So this looks like a bear flag pattern. Wrong line. Hold on. There we go. No. What the hell? I don't want that as a... I don't want it as a ray. Trend line. What the... Oh, you know what it is? Hold on. That's what it is. It's a setting. Yeah, I have the... Yeah, that's exactly what it is. There we go. Okay. There. Thank you. Thank you. Nick just said that too, and I knew that. It just took. It's early. It's 5 o'clock in the morning here. All right. So to me, it looks like we're flagging like this. If we are, the dollar's got a lot of downside. If this is the case. So I'm going to actually write down 93.80 as support, because if we break through that, then the flag's in play. Okay, resistance. So this is resistance at 94.30. Looking at the low here, 33. Let's say 94.35. Okay, But again, a lot of this is dependent on Janet Yellen. You know, if Janet Yellen is comes out today and her speech is pretty hawkish, you know, the dollar could put in a pretty good reversal. You know, if she really references the jobs report, you know, we can have the exact opposite of that. So, you know, we could see us really slump. And if she really cites the weak employment picture, then you know we could obviously see the dollar really follow through. Okay, let's go over to the peso. Now the peso, I have to say something about this peso, and I'm not in. I don't have any peso exposure. This stupid thing is so strong. Um, it's so strong. It's amazing. All right. It's one of those situations that with stocks strong or strengthening right now, I have to keep asking myself, why isn't the dollar peso, why haven't we broken down? And we're not, which tells me that this thing really wants to go higher, um, which I'm sure is freaking a lot of people out that are trading emerging market currencies right now. I'm sure there's a lot of people going, what the hell is happening here? Um, but anyway, I think that a dip down towards 1843 will be support. Here, let's just do this. Let me grab that because this is resistance. 1872. I actually played this thing on the long side on Friday. Made some money too. Not much, but 18 so 1843, 1872 US dollar. 1843. Man, this dollar Canadian's coming under pressure right now. Crude is still strong. Now, if you guys want to buy the dollar Canadian, this is the time to do it. I'm just saying. I'm not adding any dollar Canadian right now. I'm just saying, though. Wow, look at the pound. Pound's bouncing too. Hold on. I want to go back over to the Canadian. I mean, if this is a flag pattern we're trying to play out right now, I'm not adding any more dollar Canadian. Let me take a look at the Euro Canadian really quick. I want a little bit of Euro Canadian. Yeah, I mean, if the dollar Canadian is going to bounce, it's going to be here. But if we're in a flag pattern, we're going to 128. So you got to be careful. Um, anyway, all right. Where's that at? Let's go over to the Norwegian krona. This thing's still bullish, by the way. Here's the US dollar Norwegian krona. That thing came under some pressure, huh? I tried buying this on Friday and I sold it. I think I bought it at like 820 on Friday, somewhere around here, and I sold it like at 819 and change. I took a loss here trading this thing to the long side because I didn't want to hold it over the weekend because it just started sliding into the weekend. So I bought it and sold it, lost a little bit, and I said, I'm done with it. But um, I'm gonna. This chart's so messy, so let me get rid of some of this stuff. Get rid of these fibs for a little bit. See, we're like in between fibs everywhere right now. Dollar Canadian still under pressure. Wow. Dollar Canadian just took stops below those lows. Just briefly. All right. So I'm going to write down 8.15 resistance will be right here, which will be 8.24. The dollar Canadian was just on a stop run, man. It really is. Okay. 8.15, 8.24. Hold on, dollar Canadian still hitting new lows. Peso's hitting new lows too. All right, let's take a quick look at the Swedish krona. Gotta be careful with that Canadian. But then again, if you look at crude just spiked up and it looks like it's coming back down again. So crude looks like it was just on a nice little stop run. So this was a range extension completion. So that means that this support is going to be really key here. You know, depending on however you want to draw this, you know, this range extension. $8.13. Then resistance right now is going to be 8.17. I mean, this thing looks like it wants to break down. Look at the euros popping back up. What did I write down? 8.17? 8.17. And we are in a range here, but we actually look like we're making our way lower. You know, looks like we want to make our way lower, maybe towards 8.07. I can imagine this breaking lower, you know, before we see any type of bounce. But again, you know, we have Janet Yellen speaking, so obviously things can change. Okay. All right, guys. So here's your bias chart. Go ahead and write that down, and let me take a couple of quick questions. Milo writes in, "Hey Blake, would you be so kind and explain when